And maybe we can just quickly brief about the fee part, because what we will do is then we will, because I was not able to record that, so we can have that quick brief replaced in our video. And maybe we can just quickly spend 5 minutes brief on the fee related changes, which we discussed till the 30th minute of our
I think as far as the fee is concerned, since it was not recorded, one that as against the discussion papers, the fee is reduced. Minimum fee started at 150 and maximum was 750. Now it is 1 and the maximum is 1 lakh per month minimum for smaller cases, and the largest cases it is 5 lakhs per month. So what I said, that this fee now, it cannot be considered as a fee where the expenses are also included in this fee. This is the fee which is payable to an experienced professional for per month. It is not intended that the RP or the IRP will incur some of the expenditures out of this fee. And for all expenditures, either the support services would be approved or additional expenditures would be approved for employees or for because see, this is what I understand. Otherwise, for a person who actually can handle a case with 20,000 crores, either the fee would be higher. So it all depends upon the committee of creditors negotiation with the RP. If the committee of creditors is comfortable increasing the fee and making it inclusive, it will happen. If the committee of creditors say that we will approve only the minimum fee, but the expenditure will have to be included in all this. So this is all will be dependent again. So nothing has changed as far as the fee is concerned. The entire powers are with the committee of creditors. The payment also, as far as the payment is concerned, nothing has changed. However, there is only one regulation that we can now depend upon, that in case there is no money available with the company, then the committee of creditors will contribute for the fee and for the expenditure. Otherwise, there was no regulation available earlier.
So, and also we need to clarify that this is only applicable to CIRP corporate. We are not looking at personal guarantors fee. There is no minimum fee cap there. This is only for CIRP period. So for CIRPs taking place.
Oh, so in case we, in case this performance linked, in case we are able to conclude, this was what it was mentioned in this the discussion paper, and in this regulation, I think the second timeline, that is more than 165 days but less than 270 days or equal to 270 days, and still there is an incentive of 0.75% of the realizable value, that is attractive as against the earlier 180 days to 270 days. Because now this is 165 days. In fact, the 1% incentive even would not be able to, we will not be able to claim it if we conclude within 180 days. So in smaller companies, we can definitely target 165 days, but in most of the companies, we can target the second line of incentive, which is 0.75% of the realizable value. However, this is also subject to the approval of COC, and COC may or may not approve it.
In the guided timelines, I believe the time period for submission of our resolution plan to the NCLT is anyways lesser than 180 days, because it also grants some time to the NCLT, I think 14 days to process and sanction the plan.
I think that is the reason.
That is the reason. Yeah, that is the reason. So because the time the timelines that are stipulated by IBBI do talk about this, that they expect this to be completed by 165 days.
So, but then again, for this performance linked scheme, also the incentive of the approval of the committee of creditor is required. The period of minimum fee has already been discussed, but then they see the value maximization incentive, what was there in the discussion paper, it was a comparison between the actual realizable value and the fair value. But now it has been reduced. It has been reduced to the difference between the realizable value and the liquidation value. And there is a small explanation which has been added, that what is the definition of realizable value means the amount payable to creditors in the resolution plan approved under section 31.
So it has been made
So
better, right? Because the fair value would anyways be higher. So earlier the incentive was on the realizable value to be higher than the fair value. Now the gap will be higher because the liquidation value is normally lower than the fair value.
but then I think whatever our suggestions were that the realizable value shall be defined as amount payable to creditors in cash or in kind. That should be
Mm.
considered as a realizable value, but that in kind has not been defined. I believe the IBBI should have thought that that kind of clarification is not required. But according to my understanding, realizable value, whatever is payable to creditor, uh, that
Payable to
also
creditors would
includes.
not even be the NPV perhaps. Amount payable to creditors would normally be total amount payable, irrespective of when it is getting paid. So
I'm
that's
only worried
again.
about a real estate case where the everyone files their claim and the claim is for the full amount, whatever they have paid to the company, and they have not got their home. And when they finally get their home, and
Mm.
the total value of the claim should be considered as paid to the creditor. That clarification is not here. Total value of the claim would be considered as paid to the creditor in case he gets the property that he booked. That clarification was required. That
Mm.
clarification is not here, but then of course that can be assumed or that can be clarified when we uh, pass this resolution in the committee of creditors regarding this incentive. But this is also subject to the approval of committee of creditors.
Very much.
So the illustration has also been given by the in the regulation. See 0.75%. I'm assuming that a company having a liquidation value of 20 crores gets 100 crore for the creditors. So the 0.75% of 100 crore in case the resolution has actually been completed within 173 days. So that actually becomes 75 lakhs. And the performance linked, because since the liquidation value was 20 crore, realized value is 100. So the difference is 80. 1% of 80 is 80 lakhs. So therefore 75 plus 80 both are 155. So it is much less than 5 crores. So this 1.55 crore would be payable in case of such a performance of any insolvency professional. And this is also subject to the approval of COC, because in case the COC decides such kind of incentive scheme, then it becomes payable. Otherwise, it doesn't become payable. It is not automatic. So when the discussion paper was there, it was proposed that in the very first meeting, the insolvency professional will propose fixed fee and expenditure, and the estimate will be provided, and the said estimate of the fee for the first 6 months, the COC shall either contribute to an escrow account or obtain an interim finance towards it. That has been that has not been notified. So there is no mechanism required for escrow account, because we also said that it is not required, because see, the IRP can take over any bank account, and that bank account can be used for contribution from COC. The only intent was that it should be contributed by COC, but that has also not been accepted. So this is what about the fee part of it is, Ankit. Now we can actually move to the CIRP regulations notified on 16th September 2022. And this is fourth amendment. The earlier, whatever we were so far discussing, was third amendment. So the first is the regulation 4B, and the regulation 4C has been inserted after regulation 4B. The process email has to be created. The IRP shall open an email account and use it for the correspondence with the stakeholders, and in the event of replacement by the RP, and shall hand over the credentials of the same to him. So in case IRP is replaced, the email ID would be handed over. Later on, in case the RP is also replaced, the email would be handed over. Or in case the liquidator is different from the RP, then the email would be handed over. So this is what is the requirement of process email. So the process email, mostly it has to be created independent of your own entity, so that the name is only reflecting the name of the CD. It is not uh, showing the uh, name of the entities. So it has to be, that process has to be stopped. The communication to creditor is again after Regulation 6 public announcement. So this is an additional responsibility to IRP. IRP shall send a communication along with a copy of the public announcement made under Section 6 to all the creditors as per the last available books of account of the CD. This is through post or electronic means, whatever the information for the communication is available. Now it all depends upon what kind of information is available and what kind of accounts are available, what kind of books of accounts are available with the CD. Provided or where it is not possible to send a communication to creditor, the public announcement made under Regulation 6 shall be deemed to be the communicated to such creditor. So in such in how many, what kind of circumstances would be there when the communication would not be possible? Only in those cases where the books of account are not ready, books of accounts are not available, the promoters are absconding, there is no books of account which is handed over to IRP. The only available document with the IRP is the last balance sheet on the public domain, like MCA or like any other public domain, like stock exchange. However, in those uploaded financial statements, the item-wise balances are not available. So even the balances are not required in case the communication should not say that we have this much of balance outstanding in your name. The communication should only say that we have found that you are a creditor to this company. So the company has gone into insolvency. Please file your so updated amount is not required. It is only required that yes, the company had some liabilities against for this person. So that kind of communication is required. And in case the communication is not somehow possible, then this will not be a kind of hurdle to continuation of CIRP.
For certain
yeah,
certain statutory payments, it can be done anyways, even if somebody has access to the income tax portal or the GST portal, etc., etc. So there it can happen. So one question which has come in is whether only email credentials are to be handed over or email with contents are to be handed over. So this you can clarify.
no,
That what is your interpretation?
my interpretation is that it is only supposed to be an email along with the public announcement. It is not required that you should give your statement of account. It is not required that you should give the amount of liability appearing in your books of account.
No. We're talking about the previous one where the email credentials were required to be handed over to the RP or the liquidator based on the regulation changes, that the email, the CRP email should be handed over to the new RP. So there the question is that the ERP login credentials need to be shared so that the new RP can access the new emails, or he should also have access to the older emails. I think he should also have access to the older
He will
emails.
also have the access to the older
To the older
emails, because
emails,
while handing over,
but it would
while
be important for the earlier IRP to keep a copy, or maybe keep a record of the previous communications for his own interest, to preserve his own
so
interest.
technically it is possible to download all the emails till today. You download all the emails till today, save it on your records, and then hand over the use of the email ID, including the existing email IDs and to future email IDs. That's what it is.
And we don't see any need to create any new email IDs in any processes. I think this will only be a prospective requirement.
This will be a requirement wherever the CIRP is announced after the 1st October or after the notification.
After the notification date.
After the notification.
Yes. Then there was a question with respect to the fee. That question is that if claim increases after the first COC meeting, then does the fee also increase for the subsequent periods? That is another important question that we can answer.
So when we actually talk about minimum and the claims increases later on, the minimum fee definitely would be changed, and that would be applicable from the inception of the case. So the claim, somebody is not filing a claim for 2 months, that doesn't mean the size of the case becomes smaller, size of the CD becomes smaller. In some cases, you would say that the income tax department is filing a claim after 3 months or after 4 months, and that claim somehow runs into hundreds of crores of rupees. And in case those claims are admitted, then of course this actually would be in the RP would be entitled to get the fee right from the beginning, and he would be entitled to raise a bill, additional bill, because my understanding is very clear that the minimum fee is based on the total amounts admitted, and it is for the entire period. That is the period of stage 1 and the period of stage 2. So period of stage 2 would start later, but the stage 1 till the COC till the resolution plan is submitted to adjudicating authority or the application for liquidation, it is applicable for the entire period. It would be applicable. Okay. Any other questions, Ankit?
No, not really. We can move on.
So again, is the in sub-regulation to the meeting of creditor, the explanation is being added for the purpose of sub-regulation 2. It is clarified that meetings may be convened under this sub-regulation till the resolution plan is approved under subsection 1 of section 31, or order for the liquidation is passed under section 33, and decide on matters which do not affect the resolution plan submitted before the adjudicating authority. Now, when we see this original regulation, which is the regulation 18 sub-regulation 2, the wording says, which is there on the screen also, a resolution professional may convene a meeting, comma, if he considers it necessary, again, comma, on the request received from the members of the committee, and shall convene a meeting of if the same is made by members of the committee representing at least 33% of the voting share. Now, my understanding of this regulation is that there are two things it talks about. One, the RP may convene a meeting if he considers it necessary. So that is independent. There is a comma thereafter. So RP has the power to convene a meeting if he considers necessary. After this, there is another thing which starts on the request received from the members. So there are two things: if he considers it necessary, or on the request received from the members of the committee. I mean, that is subject to 33%. So so what I'm trying to say is that it should not be considered that if a request will come from COC, and that too with 33% of the voting power, then only the meeting can be convened, because this particular regulation was, even existing regulation was like this. So even the existing regulations, even in the existing regulations, the RP is calling the meeting whenever he considers it necessary. So this, when he considers it necessary, it is independent of the next part of the sentence, on the request of the committee. So this independent means that if a resolution plan is approved, if the order for the liquidation is passed, then RP can do the meeting whenever he considers it necessary. So it is not required that 33% of the members' voting power should ask for a meeting. So this is only for the clarification, because this particular regulation 18.2 is an existing regulation. So this particular requirement is independent requirement of the RP. So this is the this is only clarificatory. In fact, I have been always saying that because this is an explanation, it is not a change of law. So we have been doing meetings earlier also, but one which is very important clarification, that we can discuss all those matters which does not impact the resolution plans. Now, in case we start, let's take an example. What are the matters which impact the resolution plan? Suppose a resolution plan has been approved, and later on the RP continues the construction and continues the realization of asset and spend that money on the construction. So my opinion is that the realizations, the sundry debtor amount receivable from home buyers is an asset of the company, and the expenditure, incurring expenditure on the construction is operations of the company, and the resolution applicant whose resolution plan has actually been approved may object to this, that you are realizing my asset, which is part of the information memorandum, and you are also utilizing that particular amount for the construction, which is not according to my level of understanding, which is not according to my budget. So this is impacting a resolution plan. If the adjudicating authority takes 2 years, and within these 2 years, if you realize the entire assets of receivables from the home buyers, and you do construction with that particular amount, then what I'm supposed to do once the resolution plan is approved? So these kind of activities will have to be stopped once the resolution plan is approved. Then all these the COC meetings will have to take place, and the everything they can be approved, which does not impact the resolution plan. So this is what is my understanding about it. Any question on this, Ankit?
No, not really. I can proceed.
You can add. You want to add something on this? Anyway,
No, I
because see,
think,
then we have to
yeah,
move.
let's
Yes.
move forward.
Yeah. So amendment number 4 is like 130th day, which is the present timeline is 135th day for submission of for filing of an application before adjudicating authority under section 43, 45, 49, 50, or 66. But that has been reduced to 130th, only 5 days difference. And we will come to the timelines in one go, and all the timelines will be explained in one chart. Another amendment regarding the avoidance transaction, one, that the time has been reduced from 135th to 130th, and secondly, the RP shall forward a copy of the application to the prospective resolution applicant to enable him to consider the same while submitting the resolution plan within the time initially stipulated. So now the getting the forensic audit or transactional audit within time has been become very important. So in case it doesn't complete, then the complete compliance would not be considered as done, because the prospective resolution applicant needs a copy and would understand what is recoverable, and would also factor in case there is anything recoverable, or the committee of creditors may decide that whatever is recoverable is excluded from the resolution plan. So though not much of the difference, but yes, timeline and the duty to provide it to the prospective resolution as far as the applications are concerned. But with this, the major change has happened, because see, before even the resolution plans are submitted, it is very important that we should file the application under the avoidance transaction sections. Now, the largest amendment is in the information memorandum. One, the scope of information in this IM has actually been changed. It has been enlarged to a great extent. The timeline, which is existing 54th, has been increased to 95th day. But one important aspect that I would like to highlight. Now, information memorandum is supposed to be submitted to some committee of creditors. Then it would be provided to only the resolution applicants, because see, the information memorandum would be a detailed document, and it would only be provided to the resolution applicants. So therefore, the timelines have also been changed. It has been discussed in the past while we were discussing the discussion papers, that the information memorandum is a very, very large document. It actually, if it can be prepared efficiently, it can improve the value realization for the creditors. So therefore, the various amendments have taken place in the contents of the information memorandum. So they information memorandum shall highlight the key selling propositions and contain all relevant information which serves as a comprehensive document conveying significant information about the CD, including its operations, financial statements, to the prospective resolution applicant, and shall contain the following details of the corporate debtor. So, and now the details, whatever we are saying, yes, assets and liabilities were the existing, contingent liabilities have been inserted. Now the word geographical coordinates of fixed assets has also been inserted, and geographical coordinates of the fixed asset is like the longitudes and latitude of each asset that should be reflected in the information memorandum. Then another clause which has been added is the company overview, including snapshot of business performance, key contracts, key investment highlights, and other factors which bring out the value as a going concern over and above the assets of the corporate debtor, such as brought forward losses in the income tax returns, input credit of GST, key employees, key customers, supply chain linkages, utility connections, and other pre-existing facilities. These are additional items which are supposed to be there in the IM. Then is the details of business evolution, industry overview, and key growth drivers in case of a corporate debtor having book value of the assets exceeding 100 crore. So this clause K is not applicable to all IMs. It is applicable to those IMs where the CD is having book value of assets which is exceeding 100 crore as per the last available financial statement. So the before amendment and after amendment, we have seen that the information memorandum has become a document which is very important. It has to be presented before the COC on 95th day. It has to be given to the prospective resolution applicants on the 100th day, because see, that's what is the timeline which shows. Now coming to the other timelines, because the 75th day was earlier. Now the 60th day has been added for expression of interest. So the publication of Form G, expression of interest, this is now shortened. The timeline is shortened. Within 60th day, we have to issue an expression of interest. However, when we are issuing this expression of interest, IM is not required. IM is required later, and it is only required to be given to the prospective resolution applicants as per the list approved. So, however, the Form G has been changed slightly. So, because when we say that the expression of interest will come from public at large, some minimum information would be required. I understand that a kind of brief IM should be available as on the date of even release of Form G, because otherwise the information available would be much lesser. Now, in case we see presently what is happening is, like if we see this CIRP regulations, there is a change in the Form G. So this is the revised Form G, and you would see the different information is required now. Row 3 is added. Row 3 is the URL of the website. Row 4, detail of the places where the majority of the fixed assets are located. Row 5, installed capacity of the main product services. Row 6, quantity and the value of main product services sold in the last financial years. Row 7, number of employees, workmen. Row 8, further details including last financial statements of the 2 years, list of creditors, relevant dates for subsequent events of process are available at. So there are basically two things. One is the a detailed EOI document, and one is the Form G. And all these details are supposed to be given in a detailed EOI document, and that actually can be uploaded, and the link can be provided here in row 8. Eligibility for resolution, this is also a detailed EOI document, last date and all that. But in case you see the earlier one, the earlier Form G was having 23 rows. Now it is having 13 rows. However, it is required that most other information should be there on a link. So this is what I wanted to say, that yes, the although the timeline is reduced, but yes, the information has to be collated. It has to be uploaded on the website of the company or website of the IPE, uh, where the prospective uh, interested people would see the details of the company. Then
So the new timelines, they are applicable for insolvency processes which start post the notification of these regulations. Should that be the interpretation, or it you feel has a retrospective implication, whether it is the IM due date or the EOI due date or the EOI format?
I don't think that it can be applicable to all those cases where the maybe it is 1 month past or 2 months past. It would be very difficult for anyone where 2 months have already passed and Form G has not been released because the date was 75th day. Nobody can say that he can do it now within 1 day, because he will definitely work according to the timeline uh, at the time of the CIRP commencement date. So these timelines are applicable only to those cases where the CIRP has commenced after the notification of these regulations, and it is not applicable to the existing CIRP cases. However, when this IM is being prepared, then I believe the regulation related to IM and the contents of the IM would be applicable. Secondly, suppose in my case where I am the IRP, when I would be issuing Form G, I would be issuing Form G in the new format, not in the old format. Because if
So basically, what you're saying is whatever is required or whatever can easily be incorporated by existing CRP processes should be done, and whatever is difficult or impossible, there of course the expectation can't be that the new regulations will be followed. Correct.
right. Regulation 36 capital B is very, very important, and they have added clause 6 capital A. If the resolution professional does not receive a resolution plan in response to the request under this regulation, because in case the first RFRP no resolution plan is received, then he may, with the approval of the committee, issue request for RFRP and issue RFRP for sale of one or more of the assets of the corporate debtor. What I'm seeing in this, that the RP has to issue Form G for the entire company, RFRP for the entire company. But in case no resolution plan is received, then he can discuss with the committee of creditors, find out if there is a possibility of finding a resolution for one or more assets, means one factory, one business, one class of business, one project of real estate. If those kind of possibilities are there, then he can issue a revised RFRP where only the included assets would be mentioned and the resolution plan would be approved. However, the resolution plan would be approved by the entire COC, and it again with 66% voting power. So there is no possibility of having separate creditors for separate assets. It will have to be approved from the entire COC. Then coming to the RFRP, the strategy for the marketing of the assets of the corporate debtor. There's a new regulation, 36 capital C has been introduced. The RP now is again put on more responsibilities. The resolution professional shall prepare a strategy for marketing of the assets of the CD in consultation with the committee, where the total assets as per the last financial assets exceeds 100 crore. So 2-3 things that we have seen. So there are two segments now, less than 100 crore and more than 100 crore, and may prepare. and may prepare such strategy in other cases. Decision of implementing such strategy along with its cost and shall be subject to the approval of the committee. The members of the committee may also take measures for marketing of the assets. One, that the committee has also been told to make some efforts or take some measures for marketing of the asset. Decision of the strategy and the cost has to be approved by the committee. So this is okay. This is okay because in most of the cases we are already doing it, but it is good that it has now been brought to the regulations. That's a welcome scenario. Again, in Regulation 37, the various measures which can be taken in resolution plan. Now, this part that the sale of one or more assets or one or more successful resolution applicants, these are added in various measures. So this is again a kind of add-on amendment which is required to facilitate one, to sell part assets of the company, two, to have one or more successful resolution applicants in one case. This is to facilitate these two subjects that this Regulation 37 has been amended. Coming to the Regulation 39B, after that Regulation 39BA has been added. So the intent of adding this regulation is to, one, during liquidation process, so far the compromise or arrangement schemes under Section 230 of the Companies Act has been taking a lot of time. It has not been beneficial, rather it has been a hurdle in quicker liquidation of the company. So therefore the IBBI rightly thought that in case the COC decides to consider any scheme, then the COC should pass a resolution, and that particular recommendation should also be submitted to adjudicating authority while filing application to liquidate the company. And while the recommendations have been made, the RP and the committee shall keep exploring the possibility of compromise or arrangement during the period of application. So there are two things now. One, that the meetings can happen even after the application for liquidating the company has been filed. Two, in those meetings of committee of creditors, any scheme under Section 230 of the Companies Act can be considered, while the application to liquidate company is still pending before the adjudicating authority. So this entire process of 230 can be taken up during this period. And once the order for the liquidation is passed, whatever we have done, RP and the committee of creditors, that can be submitted to adjudicating authority within 30 days. So this will save time. Earlier it was 90 days, now it is 30 days. Now it will consume the time between the application for liquidating the company and approval of the liquidation. That time can be consumed for exploring any possibilities of compromise. So this is welcome. This is something which will keep the RP busy during this period. Now, when we are looking into this timeline, Regulation 40 capital A, we have seen in this part there is not much change, except there are changes only in two things. One is the Regulation 35A, where the RP is to file application to adjudicating authority for forfeit transactions. As against 135 days, it is now 130 days. For IM submission, as against 54 days, it is 95 days. For Form G publication, as against 75 days, now it is 60 days. Submission of expression of interest, 75 days. Consequential amendments of Regulation 36A, all these consequential amendments. However, the EOI now starts at 60. And totally it saves 15 days time, and all the further timelines like invitation for EOI, submission of EOI, provisional list of RA, submission of objections, and final list of RA, all these subsequent timelines, everywhere it is changed by 15 days, and total overall saving of 15 days. All other regulations remains the same. So there are two changes in the timeline. One, IM submission to COC. Two, adjudicating authority is filing of applications under avoidance transactions to adjudicating authority, 5 days saving. The total 95 minus 54. This is the biggest change of IM. The concept of IM is changed. It is supposed to be given to COC, and it is only supposed to be given to the final list of applicants. And final timelines remains the same. So the decision to liquidate the company, regulation 40 capital D, while the company can be special provision relating to timeline, while the decision to liquidate the company, the committee, while considering the liquidation of the corporate debtor, may consider factors, but not limited to non-operational status for proceeding, like non-operational status for preceding 3 years, goods produced or services offered or technology employed being obsolete, absence of any asset, lack of any intangible assets, or factors which bring value as a going concern over and above the physical assets, like brand value, intellectual property, accumulated losses, depreciation, investment. Such consideration may be recorded and submitted to the application for liquidation submitted by the resolution professional to the adjudicating authority. So there was basically a lot of litigation, whether the COC has decided to liquidate the company, whether the COC has considered what was the decisions, why was the decision. So all this has been now captured in a regulation 40 capital D, so that the litigation on this subject may be reduced. Form G has already been explained. I think we are now going to liquidate. I think the
So
time
we should break now. We are already exceeding almost 13 minutes beyond our time. So we should break this and then take this as part B. And I believe we have
Ankit, since this
covered.
is very, very important part, I think we can do, instead of waiting for the next Sunday, our readers would like to understand our opinion about it, and we can even do it on